Hi everyone, welcome back to Berich Podcast. As said in the yesterday's video, this video is going to be about HDFC Bank. I found an article in the Mint newspaper which says merger pain lingers for the HDFC Bank. In this, they particularly mention that the loan to deposit ratio, if it reduces, it's a problem for bank. So why is that after merger, the loan to deposit ratio is decreasing?
Okay. The way I've told you this, the way the bank makes money is it takes deposits,
Okay.
right? And there's two ways deposits are made in the bank. There are primarily two accounts. One is a savings account, which is what you and me have. Then companies have something known as current account. Savings account, they pay very little interest. To incentivize us to keep our money there. Current account is a privilege for a company.
Okay.
So they offer lots of other services to the company. So they usually don't pay any interest. Current account is like free cash for the bank. And you can imagine big companies when they have their accounts, current accounts in HDFC, all that is free cash sitting for the bank. And bank in turn can take all that cash and lend it out at a higher interest rate, and it can make profitability for the bank. So the cost of funds for the bank come much lower. The bank won't need to borrow. The bank will not issue bonds, it will not borrow from the government, it will not borrow from RBI, because it has a lot of liquidity, a lot of cash, and it makes it far more stable and it's more profitable.
Okay.
When that starts going in the opposite direction, which is people don't want to keep money in the account anymore, businesses don't leave money in the account anymore, then the bank's resources start evaporating.
Okay.
But it still needs to do business. So then the way the bank does business is it borrows through bonds, other means and methods, it borrows funds. So the profitability of the bank starts coming down. Amount of earnings it does comes down. This is compounded for HDFC because of the merger.
Okay.
They have HDFC Bank and then they have HDFC. What was HDFC?
Housing Development Finance Corporation.
Yeah, that's a loan company. Bank was also doing loans, but it's also a bank. So when you merged all this, all that portfolio jumped onto the bank's balance sheet. So it's not helped the bank. That too, in this current climate which we are facing, this is not only happening in HDFC, it's happening throughout India as a population. As we spoke in another video, that more and more people don't want to leave money in their account. Thanks to social media and awareness that inflation in India, real inflation is at 9%, 10%, wherever. And your bank savings account is giving far lower to that.
Okay.
So if you leave 100 rupees in your bank account and you're getting, let's say, 6%, and 1 year later it's 106 rupees. The same 100 rupees, what it could buy, the purchasing power of that 100 rupees has gone down to 90 or 85. So even if you add that 6 rupees, you don't recover. And then you have tax and all that. So it really doesn't help you to leave any money in the account because you're not beating inflation. And even FDs, which offer a little more interest, won't help you.
Okay.
This has led to more and more people investing in the mutual funds. You have seen that also in the news. That record number of mutual funds have opened up, right? Record number of SIPs are going on, right? So all that money is moving towards the stock market, not in the banking sector. So banks have become innovative in the way they make money now. So the best way to make money is in credit card. There also they're getting squeezed. RBI is waking up to that. And RBI is saying, no. Don't issue credit cards to everyone you see. No more co-branding cards. Everywhere they're reprimanding them. So banks are up against the wall. So as a bank,
they should somehow make the money.
Correct. So it is a problem for the banking sector as a whole, which I'm sure they need to find some solution to. And one of the solutions will be that they need to start looking at the way they're able to retain their customers. Instead of charging for every service they provide you.
We did a video also.
Correct. We did a video on that. Now, looking at the bank itself, he'll charge you. You walk into the branch, he'll charge you. You talk to my watchman, I'll charge you. Like that, he's charging you. Like a taxman, he's taxing you everywhere. So people don't want to do business with the bank. So bank has to reevaluate all that and make themselves more friendly. Then another thing banks need to do is they need to retain high net worth individuals. Yes, they're not able to retain them. Because in India right now, the way taxation laws are, and you can see this on YouTube, many videos have been done about this, the way taxation rules are in India and in investment rules, and it's very claustrophobic for high net worth individuals. Most of the funds are leaving India. More people are wanting to park their money outside India. More people are buying properties and assets outside India. They want to live outside India because it's becoming very hard for a high net worth individual to stay in India with the way the current structure is.
Okay.
So that also government has to help. Banks have to help. Banks need to ask the government and RBI, and these things take time. So all that needs to happen. How fast all this will happen, I do not know. But these things periodically in society, if you see, every 10-15 years, it swings from one side to the other. Right now, it's swinging to this side. We'll have to see. Like I said in that other video, if we see a huge correction in the market and people start losing money, they'll then feel, I'd rather keep my money in the bank. At least I'm not losing it. They only give me 6 rupees or that 100 rupees. My 100 rupees is still there. I put it in the stupid mutual funds. That 100 rupees became 50 rupees, and for 2 years it's been sitting as 50 rupees. And I asked the guy when it will get better. He's saying, I don't know. We'll have to wait. He's saying it might take 10 years. And these things can happen like this. Next year, Fed interest rate cycles does something to FIIs, or some other macroeconomic or geopolitical tension really erupts huge. Things can sway very fast. Okay. And we will be talking very differently about HDFC in the future. But the funny thing is, if you see HDFC, majority of the people who have been investing in HDFC are FIIs. So you should take heart in it. Most of the private banks in India, majority of the FIIs have their money in them. That means they believe in banking sector in India. They believe in the finance sector in India. And it's still very profitable. Though they have had a rough quarter or a rough year. Quarter year and all doesn't matter if you look at it in the long term.
So why has CASA decreased from 42% to 38% post-merger?
That is because of the ratio. Like I said, they bought all those things into their balance sheet. So when you look at it in balance sheet, it's like when you get married, you take all your wife's loan also.
Okay.
All her burden becomes your burden also. So then when your ratio is nothing but numerator, denominator is ratio.
Okay.
So numerator, denominator changes, ratio will also change.
Okay. In this article, they mentioned that yield on assets and cost of funds have increased. So what is the reason for that?
Cost of fund for the bank is like the bank's loan, right? For you leaving their money with them, they have to pay you, right? So that cost has gone up for them. Yield on assets is what? It is what the bank is making. That is the loans the bank is giving.
Okay.
So the assets for the bank are the loans. So the other way around for the bank compared to you. For you, your loans are a liability. For the bank, the loans are assets. Okay. Because that's where the income is coming from. And for the bank, like your deposits are your assets. For the bank, that's the liability because it has to pay your money back and plus it has to pay interest for you.
Okay.
So it's the other way around for the bank. You understood? So that's where the cost of funds are. And yield on assets are what money is making from its loans.
Okay.
So that has changed because of this post-merger. Like I said, loans and everything which has come into and everything being consolidated has done this to the bank. If you look at it like this, you don't have to worry about it. This is just a cyclical business and it should be fine going forward. But the problems we are facing is much bigger in the sense that not only this is an HDFC problem, it's a banking sector problem. So the way you have to look at it is different. But this is just one quarter because of post-merger. They were hoping for better performance. But still, HDFC is one of the best banks in India in terms of profitability, in terms of share value, in terms of even customer retention and relationship. If you see, they're still leading everybody by a mile.
And particularly, they concentrate on salary employees.
And they have huge current accounts. And they're doing very well that way. But they do get now and then into hiccups. Like a few days back, their online banking website was down. The apps were working. But you could not log on to their website. The entire day, 24 hours, their online banking, nobody could log on and do any banking. So they do have issues which they need to work on. But by and large, they're more of a trusted brand than even ICICI.
So can we see same happening with IDFC and IDFC First Bank merger?
That's tough to say. Because the economic climate also affects the HDFC Bank. It's just not purely merger, right? It is also the economic condition which is there in India and macroeconomic pressures which are there. All this also plays a factor into it. Let's say by the time the IDFC First Bank and IDFC merger comes through, we are going through an upswing.
Okay.
This
will not happen for that.
So we have to wait and watch. That'll be interesting. But as an investor, long-term investor, even now HDFC Bank has not corrected. See,
price to book is more than 3.5.
Exactly. You read all this in the paper, immediately you think as an investor,
is there an opportunity?
I have to buy. You go check the price like Hachi. So this is all just filling paper. But does it give you an opportunity to buy? No. This is going to create a point where price to book is going to drop down to 1 or below 1. No.
Okay.
FIs are not going to exit this bank. So if you look at it like that, yeah, this is news. But as an investor, what does it hold for me? Like we spoke in the first 10 minutes about society and how it affects banking sector and everything. It's all intellectual. But if you look at it as an investor, this is investor news. No, it's not. As an investor, this has nothing for me.
More of a banking news.
Yeah, more of banking news, intellectual, but what is this going to imply? Am I going to go buy HDFC Bank? Is the price going to drop? No, it's not going to give me any opportunity to buy. It's not going to create bloods on the street.
Okay. So thanks for watching the video. So if you found this video interesting and informative, please like and share it with your friends and subscribe to this channel for more videos. Thanks for watching the video.
Thank you.